Alrighty, everybody, welcome to our weekly Outlook webinar. Thank you guys so much for being here. Today is our first Sunday of November. It is Sunday, November 5th, 2017. Thank you guys for taking some time out of your Sunday afternoon to watch this. If you guys are watching the recording, I also appreciate you guys. If you guys are attending this webinar for your first time, let me introduce myself. My name is David Schinkel. I am the CEO and founder of Positive Traders. I run these Sunday weekly Outlook webinars for free just about every Sunday and have been for a little bit over a year now. If this analysis helps you guys out in any way, please, if you're watching the recording, please leave a like or comment on YouTube. Leave us a review on our Facebook page, and you can check out a little bit about my premium group at positivetraders.us. Let's go ahead and jump right into things, guys, for the week. Just before we start, I do want to explain my disclaimer. As always, guys, this is just my outlook, my opinions, my personal views on what the market will do this week. Doesn't necessarily mean, even though I am a professional, profitable trader, does not necessarily mean I'm going to be right 100% of the time. That being said, please take all this information with a grain of salt. Please be using your own analysis. This is by no means any sort of financial advice. This is just my outlook. This should only be used for educational purposes, and you guys should only be executing trades based off of your own analysis. But let's go ahead and get started for the week. First off, I would like to look at the economic calendar. This week is definitely it's very black and white from last week. If you guys were with me on last week's webinar, we saw that there were three central bank interest rate decisions, and there was NFP last Friday. This week, looking at the economic calendar, just doing a very quick scroll through, there's not a ton of, there are some red folders, which what we're looking for on this economic calendar is for the high impact expected news events. So there definitely is some high impact news throughout the week, but nothing super crazy. We don't have any central bank, or actually we do have one central bank interest rate decision. So we will have the Reserve Bank of New Zealand deciding if they keep interest rates the same or raise interest rates or lower interest rates Wednesday afternoon. But aside from that, just some general high impact news throughout the week. So it should be a pretty light trading week. And what I mean by that is we shouldn't have to be on the sidelines too much. We should be able to get a pretty good read on the market and be able to get in some trades this week. So first off, looking at the dollar index, I just want to point out two things. First, I want to point out our inverted head and shoulders. If you guys have been following my webinars for a while now, you'll know for the past couple weeks we have been addressing this inverted head and shoulders, which was just broken at the end of not last week, but the end of the week before last. So, and we can see all of last week. Let me go ahead and grab my little pointer out. All of last week, we pretty much just moved sideways with the dollar index, which was very nice. That created some nice accumulation of orders and created a nice bull flag on the dollar index. Moving into this week, let me be very clear that my bias is to more strengthening of the dollar. I think somewhere around this area, or at the 96 level, is the next target for the dollar index. Let me be very clear with you guys also, though, that does that mean that I think it's going to go straight up to my target? Maybe, maybe not. The markets like to move in waves. We could see it like pull up a little bit, maybe come back down to retest the flag, the resistance of the flag, and then move up. So there's different scenarios. So that's why I'm saying make sure you guys are using your own analysis before entering trades. It's possible we could even continue a little bit more consolidation before moving up higher. So either way, my medium-term target is going to be around the 96 region with the dollar index. Meaning if we're looking for the dollar strengthening, we are looking for gold weakening. So gold kind of looks very looks like the opposite of the dollar index right now. We can see a pretty big drop over the past couple weeks, and then last week it just consolidated right around this zone, this around 1270, this current support level. So we're making a nice bear flag. If we break this bear flag, which I do think we will, my targets for gold is going to be around the 1250 level for this week and next week. So watch for the 1250 level of price to move towards the 1250 level based on dollar strengthening. If you guys are new to trading, I highly recommend you guys have a trading journal during these webinars. If I'm going a little bit too fast for you, these are recorded and uploaded to YouTube. I post the link in Telegram, and it's also on our Facebook page, and you can just search YouTube. You can just go onto YouTube and type in positive traders and our channel will come up. But 1250 is the next target that I'm looking for gold. Euro USD, the exact opposite of the dollar index, meaning if we're looking for a buy on the dollar index and we're looking for strengthening of the dollar, then we are looking for a sell on Euro USD. And very similarly to the inverse of the dollar index, we have a very clean head and shoulders in this area. So head and shoulders was broken. I'm expecting some downside on this pair because our head and shoulders was broken right here at this neckline. And then we have a very nice, all of last week, we had this very nice bear flag. And if you guys have been following along, the proof is in the pudding. I posted all last week on last week's webinar that I was expecting more downside on Euro USD because of this break of this head and shoulders, some more strengthening of the dollar. But I also posted on Friday, let me just show you guys where price was on Friday. On Friday, when price was right around this area, I mentioned that my targets for Euro USD would be somewhere around the 115 range. So if you caught some pips on this move based on that, my analysis of it moving down to the 115, you caught a nice about 60, 70 pips or so there. But I think there's a lot more downside to be had on Euro USD. You guys can see right here with this blue arrow. Let me go to the daily. With this blue arrow, you guys can see where my targets are. So I'm actually going to move this over to the right just a little bit, and we'll probably move it something like that. So 115 is my next level that I'm looking for. And just so it makes sense with you guys, so you guys can all see, I'll just quickly throw it on the weekly. And I just want to show you guys a couple different levels, okay? So weekly, let me just actually delete this hide this head and shoulders very quickly so you guys can see something. This is another reason, guys, why I like to trade on the higher time frames, because price action is a lot cleaner. If you guys know me, if you guys are in the premium group, you guys watch my daily webinars that I do every single Monday, Tuesday, Wednesday, and Thursday for the premium members, you will notice that I work with the higher time frames. You rarely see me drop it down to the 1 hour or the 30-minute or the 15-minute. I like to focus on the weekly, the daily, the 4 hour, those types of time frames for better confirmation. But just a couple different levels in this area. We can see that decline in Euro USD that when it actually topped just a couple weeks ago, that was actually at this previous level of support. So, and we've had this green zone on here for quite a while. And then another more important zone, the reason I say why it's more important is because it's where price is headed to right now, is this previous resistance level. So we have this major level of weekly resistance that was broke in the middle of, I think that was June of this year. Let's go ahead and see real quickly. June, actually early July of this year. So end of June, early July, we saw this weekly resistance break. And I think that's where my target of the next level of support for Euro USD is going to be. So not only do we have that technical level of previous resistance now acting as support, but we also have this 61.8% retracement level. And it's also a psychological level of support. Any even number guys like 114, 115, 116 is what we call a psychological zone. So a psychological level of support or resistance, in respective to where price is at. So since we are above that level, this is going to be a psychological level of support. So this area, the 115 level, is definitely, in my opinion, some good confluence of where we might see a bounce of this pair. And then once price reaches that zone, we monitor price action and we evaluate our position and see what our outlook is. Let's move on to dollar Swiss franc. Dollar Swiss franc had quite the rally last week. didn't have as much consolidation as Euro USD or the dollar index. If you guys understand correlations, or you guys have been following me and keeping up with the correlations that I preach just about every single week, is Euro USD and dollar Swiss franc generally have a negative correlation. So we're seeing Euro USD moving down because we're seeing the dollar strengthen, and that means we're seeing this pair move up. We are at a pretty major level of, we are getting up to a major level of resistance. So just so you guys can see this trend line right here, so this makes a little bit of sense for you guys. You guys can see this ascending trend line that I'm actually extending out a little bit right now. You can see in the past where it has acted as multiple levels of support for price. I think that we could see a little bit of resistance in this area. So I would prefer to stay on the sidelines at this time with this pair, even though I think the dollar is going to strengthen, even though I think Euro USD is going to drop. Just from a technical standpoint on this pair, we may see a little bit of consolidation around this resistance level. So let's go ahead and stay on the sidelines with this pair. Pound dollar. If you guys watched last week's webinar, or again, if you guys are in the premium webinar, we talked about this major bear flag in just the amount of consolidation that this pair has been going through, and we've been biased more to the downside based on dollar strength, and that is just what we're seeing. Prices just actually as on Friday, price kind of came in and retested the lows of this flag of this consolidation. So expect some more downside on this pair. Now, where could it go to next? Well, it's a little bit difficult to say. The price action isn't super clean on this pair. So what I would like to do is just quickly, we can measure from the top all the way down to the bottom, and we can see how far this moved. And you can see right there, 588, so about almost 600 pips lower. So we could see potentially a 600 pip drop on this pair. A little bit more conservative is I would probably just measure from the top of this down to the beginning of this consolidation. So about 375 pips or 380, or let's just round up to about 400 pips, or even round down to 350, and we can measure 350 from here. And that's going to put us at around the 127 area. So I would expect this pair to continue falling towards the 128, 127 area. So keep that in mind. And again, guys, like this analysis, if you guys have been following me for a year and a half, couple months, however long you've been following me for doing these daily webinars, not to sound losing the word right now, but not to sound arrogant, that's the word, not to sound arrogant, but generally speaking, my analysis is pretty correct. If you guys have seen my portfolio for my trade copier that I have for my premium members, the trades that I place in there have about a 78% win rate according to my MyFX book. So this is probably stuff that you want to be writing down. When I'm giving you guys out what my targets are, when I tell you guys Euro USD, my next target is 115, or I tell you gold, my next target is 1250, or pound dollar, I tell you my next target is between the 127 and the 128. It's a pretty good indicator of where price is probably going to go in the next couple of weeks. So don't just, don't be putting this stuff off. But let's go ahead. I'm just looking at pound yen for a second because I think it just spiked up. Yeah, pretty crazy. Just literally the past 20 minutes, it's moved up pretty high. Okay. Anyways, just because I was looking at that pair right before this webinar. So pound yen, I am biased to the upside. Again, if you guys were here in the very beginning, I said I am very, very strongly biased this week to a strengthening dollar. Again, just to quickly look at the dollar index, not only there's just so much going for the strengthening dollar from a technical level, also from a fundamental level right now. So we talked about this inverted head and shoulders, but we also talked about this bull flag, but also look at how this Thursday and Friday candle closed. Look at those wicks on those. Look at the bottom wicks of those candles. That's huge buying pressure. Not only that, but if you guys understand the fundamentals, you guys understand the internal workings of the markets are currently pricing in, another word for pricing in is expecting. The markets are expecting a strengthening dollar just because they're expecting interest rates to go up. If you guys do not keep up with the Federal Reserve, I would highly recommend you guys, do a little bit of research on the Federal Reserve and, just kind of research what you can. But they are talking about raising interest rates right now. So there is a very, very good chance that they will raise interest rates before the end of the year. I'm just going to give you guys a tip right now that a good place to go and read about the Federal Reserve. If you guys, again, some of you guys might not care about this, but I want to just very quickly show you guys. If you do, let me just delete some of this stuff. I have it actually saved. FOMC minutes. Okay, so if you had a Federal Reserve, I'll put this link in the chat room for you guys very quickly. So it'll be in the chat right here. Just posted it right there. So federalreserve.gov/monetary policy/FOMC calendars. You can actually come on here and you can actually see all the FOMC meetings for the year. As you can see, they happen 8 times a year. The next one being December 12th. Now, here is this. Now they release a statement that you can actually click on the PDF and you can actually read. So this usually is nothing too crazy. What you're really looking for isn't too informational. What you're looking for is the minutes that they release. So you can see that on September 19th, 20th is when they had their actual meeting. They released a statement along with that meeting, but the actual minutes are released a couple weeks after that meeting. And so we can see on October 11th, for example, there is going to be another one being released very soon. I think it will be released next week. Let's just double check real quick. USD. I'm just going to check the calendar very quickly. I believe it is next week, maybe on the 12th, maybe. Let's see. Not the 12th. Let's go ahead and see. Not that week, not next week either. Let's try one more week, guys. Just bear with me. FOMC meeting minutes. Okay, right here. So on Wednesday, November 22nd, FOMC meeting minutes. This is right now we are looking at, this is Pacific time, guys, if you're in California. Of course, if you guys use Forex Factory, you can come right up here. You can actually create an account for yourself, but you can come up here and you can change the time. So you can set it to your own time zone. So all of these times on the left-hand column are going to be the same time wherever you live. It's very helpful. But we are going to have the FOMC meetings minutes release. If you guys don't know what meeting minutes are, it's basically a report or it's the verbiage that they discussed in writing. I'll give you guys an example. So from the one from the 31st to the 2nd that they just did from their FOMC meeting, they're going to be releasing those minutes on the 22nd. So if you guys go to this website and you wait exactly at this minute. So for me, if right now I'm in California, I'm not going to be in California around this. Actually, I may be in California on November 22nd, but wherever you are, exactly at this time, the meeting minutes is going to be released. So you could be on this page and you could click refresh and the minutes are going to pop up right here. But what you're looking for is I usually click on the PDF version. And this is very lengthy. Again, some of you guys may not care about this, okay? But if you're just in here to pick my brain, you're brand new to Forex, maybe this isn't the most important thing right now, that's okay. But I know this looks like a lot of information in here. Guys, this is some seriously juicy information. But you'll notice towards the middle, they have the outlook for economic activity. They literally tell you what they're thinking. They give you some graphs, they give you some charts. If you guys, you'll understand how to read these over time, but it gives you all the juicy information about the Federal Reserve, the outlook for inflation, appropriate monetary policy. Towards the bottom, they have their economic projections as well. So let's get down here towards the bottom and you will see uncertainty and risks. No, it's more towards the bottom. Let's get a little bit further because I know I read this one. Let's go forecasted uncertainty. Okay, so sometimes they will have this. So it's forecasted uncertainty. So they will release this. Usually the last couple pages will give you the most information. So I know it's a lot of reading, guys. I know some of you guys don't care. That's okay. But for those of you guys that do care about these things, that's why I'm showing you guys this stuff. Okay. Awesome, Christian. Yeah, I'm glad some of you guys are finding some value out of this. So again, you go to I put the link in the chat room, but you go to federalreserve.gov/monetary policy. And I just have it bookmarked, guys. I keep it bookmarked so that way I can see all of this and I can go to it and read it. And the reason why do I say, focus on what the Federal Reserve does? Well, if you guys don't know, the Federal Reserve, they control what happens to the dollar. They control if there's more printing, which causes inflation, or if there's less printing of the dollar, which causes deflation. Now, the dollar, the United States dollar, makes up over 60% of the volume in the Forex markets. So if you can understand what is happening with the dollar, then you can understand what is happening with the rest of the markets for the most part. Or at least for the pairs that I trade. You'll notice over to the right, I've talked about this before, that you look at all of these pairs and they all have the dollar in it except for pound yen. And the reason why I still trade pound yen is because pound yen has a negative correlation to gold, and gold has a negative correlation to the dollar. So if I know what the dollar is doing, then I usually know what gold is doing. And if I know what gold is doing, then I can understand what the pound yen is doing. So all of these things are correlated to each other, okay? So let's continue moving forward. Pound yen, expecting more upside on this pair. I was expecting upside on this pair last week as well. So this is just a good example of why you don't want to just take my analysis 100%. We did see a little bit of consolidation last week on the pound yen, but ultimately I'm looking for this pair to continue moving higher, along with dollar yen. I think dollar yen, oh wow, holy cow. Let me look at this on the hour. I just want to very quickly see. Yeah, whoa, there's some movement going on dollar yen right now, or really across the board on the dollar. I think it's the markets reacting to NFP. Believe it or not, guys, I know a lot of people were talking about how NFP was bad for the dollar. It was not bad for the dollar in any means. Yes, the actual number for NFP was not good, but if you understand the internals of NFP, you look at how actually unemployment rates are at the lowest they've been, like multi-year, almost in a decade. They're the lowest. It's the lowest number unemployment rates, lowest percentage unemployment has been in almost a decade. So pound yen, I'm expecting this pair to move much higher this week, towards moving into the end of next year, or towards the end of this year. I think we could be coming back up to retest these previous highs. I think 119 is definitely in range, but last week we marked off this consolidation area. So the beginning of last week, we actually dropped, I think it was like Sunday evening moving into Monday morning. We saw this kind of little bit of fake out. In my opinion, this drop last week was really just kind of a stop hunt for anybody that bought in this area expecting price to stay in this channel. I think that this move was the market makers pushing price out of this zone to hit people's stop losses, and now we can see a big movement up, and this is due to dollar strength. If there's a strong dollar, there's a good chance we see strengthening in dollar yen as well. So I'm expecting this pair to move a lot higher. We can also see this on the weekly as well. Last week made a pretty nice exhaustion candle, has a really nice candle on the bottom showing a very high presence of buyers. So I would expect, price to probably this week reach up towards the 115, 116 zone. So keep that in mind. Now let's go ahead and look at AUD USD. AUD USD, I think, is going to be a great opportunity to sell this week. Very similar to Euro USD. If you guys followed the premium group, I just want to show you guys how clean price action is on this pair. Actually, and I want to tell you guys right now, if you're in the premium group, probably going to be calling a trade on this pair in the next 12 hours or so, probably even less, in the next few hours. I see, with my eyes, I can see a very good opportunity on this pair right now. But you guys can see this head and shoulders. If you can't see, let me go ahead and just redraw it very quickly. Here is the head and shoulders on AUD USD. All right, now it is a descending head and shoulders. Some of you guys are like, well, that doesn't look like a head and shoulders. Well, get a little bit more knowledgeable on head and shoulders, because there's a couple different kinds. There's ascending head and shoulders, which would be going the opposite direction, to be going up. There is flat head and shoulders, horizontal head and shoulders, like what we see on Euro USD, where the neckline is completely flat. And then we see on AUD USD, where it is a descending head and shoulders. And look at this price action on this pair, guys. This is like a trader's dream right here, is when you see that neckline broken right here, We saw price move down, consolidate a little bit, come back up to retest just right there at the neckline, which is also the 50% retracement level, also a multi-year level. I mean, multi-week level. I'm sorry, a weekly level of resistance. So you guys can see this major resistance right here. So got a very nice retest off of that area and then a rejection. So we say retest and then rejection. And so still consolidation right here. This trade was a trade, if you guys can see, this trade right here. This is a trade that we called in the premium group that hit our take profit. We can actually see on the 4-hour, just so you guys can kind of get an example. If you guys are in the free group right now and you're interested in my premium group, interested how I give out my signals, I gave out this exact same screenshot in the premium group, obviously before price had hit our take profit, but every single trade we take, I do post my trading view analysis. I post a screenshot. So we took this trade and it did hit both of our take profit levels, take profit 1 and 2. And you guys can see the risk to reward on this trade was excellent. So I'm expecting a lot more downside on this pair this week along with Euro USD. They have a very positive correlation, but I really like how we broke through this major level right here. So I'm expecting price to move lower. And then also we have the 61.8% retracement level right here. So if it breaks that, we could be seeing a pretty big decline back to a 100% retracement. So watch for the break of this level, which you guys can see right here. 61.8% retracement level is basically 0.635, we can say. Once it breaks that area, we get a very nice break below that level. We're going to be expecting price to move toward, I'm going to be expecting price to move towards the 74, 73 zone. So again, bias to a strengthening dollar. New Zealand dollar, US dollar, not super interested in trading right now, although my bias would be to the downside. We had a really nice Friday candle close. Nice little exhaustion candle on this pair. So I think we are going to see some downside on New Zealand dollar this week. So look for some downside. But we did talk about this last week that this isn't my favorite pair to trade right now just because of this major support that price is sitting at. So we can see, you guys can see the green zone. I don't have to draw it out with the black line, but you can see previous resistance over here to the left and then previous support over here to the right, a little bit of a double bottom in this area. And then we found a little bit of support last week in this area. But ultimately, I think that a stronger dollar is going to be the catalyst for this pair to break this support around the 68.50 level. So watch for more downside on this pair. And as far as targets go, I would probably, let's go ahead and actually fib out this entire move right here. And I would be targeting somewhere around the 61.8% retracement level. And that's also right around the next even number, around 67, our next psychological level of support. So I would be expecting price to bounce off of this area or find some support in that area once we break the support. Finally, guys, USD CAD. USD CAD, I'm going to be honest, let's go ahead and sit on the sidelines right now. We just went over a ton of opportunity on all these other pairs. I mean, you guys just saw how beautiful AUD USD looks, how beautiful dollar yen looks, how beautiful Euro USD looks, how beautiful gold looks. There's so much opportunity in the markets this week. I don't want to really trade USD CAD, not very interested in it. We did see some decline on this pair last week, and you guys have to understand that even though we're seeing the dollar strengthen, so some of you guys might be asking, why is this pair not going up? Well, USD CAD has a very negative correlation to oil. So we are seeing a huge rally in oil right now. Just over the past couple weeks, it's moved up a couple dollars per barrel. If you guys are not familiar with these numbers are over to the right, this is the dollar amount per barrel of oil. So like right now, 55.84. So it costs $55.84 for 1 barrel of oil. When this goes up, that is good for the Canadian dollar. So that means that which direction would this chart move? If something is good for the Canadian dollar, it's going to move down, right? Because if we're selling this pair, that means the dollar is weakening and the Canadian dollar is strengthening. So, or vice versa, right? Maybe not so much the dollar weakening, but the Canadian dollar is just becoming stronger than the US dollar at that point. So we saw a little bit of sell-off, a little bit of uncertainty, but I did mention to you guys that if it breaks this trend line, which it obviously did, you guys can see the break of the trend line on Thursday and Friday, be careful because we do have this major level of resistance over here. So we may find a bounce up in this area and then moving up higher. So we'll see what happens. I mean, this definitely depends really on more so what happens to oil than anything. But again, let's go ahead and just recap very quickly, and then I will let you guys go. Dollar index, very, very bullish. We have that inverted head and shoulders that was broken. We have a very nice bull flag on the dollar index. And then we also can see, just scaling in a little bit, that Thursday and Friday candle for the dollar index created some really nice exhaustion candles showing a lot of buying potential and moving up higher. Gold, expecting gold to move lower. We've got that really nice bear flag on this pair targeting 1250. Euro USD has got this really nice bear flag, and there's also the 50% retracement level right here. So this green zone you guys can see over to the left here is that 50% retracement level. So I'm going to be targeting for the next level of support around 61.8%. So looking for 115 for the targets. Dollar Swiss franc we're skipping. Pound dollar we're skipping right now. Just doesn't look as beautiful, but I do think that price will move towards the 128, 127 region. Pound yen, looking for buys on this pair throughout this week to retest our previous highs. It may go higher than that, but even retesting our previous highs is about 300, almost exactly 300 pips higher. Dollar yen, looking for more upside on this pair into the 115, 160 region. And AUD USD, looking for this pair to move lower. And one thing just to show you guys like what I might target for AUD USD, just to show you guys if it drops, where might it drop to? Well, I'm going to go ahead and look where our extension level would be since we're breaking through the 61.8. So if we mark off this little retracement, so I'm actually going to go ahead and mark this off with a green box. Oops. Green box, and let's go ahead and put this here and extend this to here. So we are looking for the extension level. You guys can see right here, right next to the percentage, 0.7560. Also, let me just give you guys a little bit of a tidbit real quick. This is some free value for you guys. If you guys do not know what I'm using right now, this is TradingView. I personally only use MetaTrader 4 to execute and place my trades. I do not like charting on MetaTrader 4. It feels very old school. There's a lot more updated. But if you guys are wondering how to get your settings like mine, you just double click this and then you can go to your style. This is obviously recorded, you can come back and skip to this area, but this is how I have mine set up. You know, you can choose literally any color you want. You can do, you know, the defaults. You know, you can have some rainbow colors for each one. You can do whatever you want, but I just like this purple one that I have. So that's the one that I use. You can completely customize this, and then you have all these tools over to the left and right. So if you guys are wondering how to get your chart set up like mine, this is how. But again, why am I using an extension level? Because when I go to the daily and I look at selling and I'm looking for another, what I'm looking at is once we break this area, what my eyes are looking at is I'm looking over to the left here, and I'm looking and I'm seeing, I'm asking myself, do I see any, you know, clear area where price, you know, comes through? And I don't really see that. You can see that there's not really visually any specific area where price kind of cuts through any price over here and gives us a clean level of support. So since I don't see that, and it's also pretty far back, right? It's like almost 6 months back. I would much rather prefer to use my extension level, also because if you guys notice, we are past all of our extension levels, right? We have the 23.6% retracement level up here, 38.2, 50, and 61.8. But below that, I don't have any other extension levels below here. So I'm looking for somewhere between here and here, between the 61.8 and the 100% retracement level, where I could target first. So that's going to be, that's why I use the extension level, because there's nothing really to go off of besides a very nice and clean extension. So in a possibly, hold on, I just want to see if this works out. I just want to see something for you guys. Oh no, hold on guys. Template purple. Okay. So let me just show you guys how well, like, do you guys see this really quick? Watch, let me hold on. Bear with me guys for 1 second. We're going to just delete this retracement level just to show you guys how powerful the extension levels work. Okay. So look at this. Look at where if we measure this pullback, look at that. Isn't that kind of interesting, right? It's kind of like, Makes a lot of sense, right? So there's the 61.8% retracement level where we found a bounce at. If you guys can understand how to use you guys can see that I don't have any crazy strategy. We aren't talking about counting waves. We aren't talking about using indicators. We're literally just using price action and a couple tools like Fibonacci, because that plays an important role in all aspects of life outside of trading as well. Fibonacci is a very common thing. So, these extension levels are no joke, guys. I just want to also see this too. If you use this extension level, you can see a little bit of a bounce in this area. So everything happens for a reason in the markets, guys. Everything is simple. Okay, that I just keep it simple. That's it. I keep it simple. And my secret, I guess, my secret formula to being successful in the markets is risk management, guys. Risk management and risk reward. See this trade that we took in the premium group, not last week, but the week before last on this pair. Look at the risk to reward ratio. We weren't risking, it's not a 0.75 risk reward. We risked 23 pips. You can see the little red right up here, 23 pips for 72 pips. And our take profit, this was take profit 2. Our take profit 1 was 46 pips. So our take profit 1 on this trade, and if you guys are in the premium group, you guys obviously remember this. This was take profit 1, and you can even see that's a 1 to 2 risk reward. So there's a reason we have, there's a reason I'm successful trading, and it's because I'm disciplined to do this. So that is that, guys. I believe that is everything for the day. Now, one last thing. Just bear with me, guys. You want to know how to be successful in Forex. If you've already seen this, that's fine. You don't have to stay for this. But if you have not seen this, I want to just drop a nugget. You guys want to know how to be successful. You want to know how to make money in trading. You want to know how you can – some of you guys think that you have to take and some of you guys think that you have to literally take 10 trades a day, that you have to make money every single day in the Forex markets. Well, you don't. Here is how you can be successful taking 10 trades per month. I'm actually even going to do it with taking 7 trades per month. But let's just do it with 10, okay? So let's say you take 10 trades. You guys know the markets are open 22 days out of the month on average. So in 22 days, in 1 month, if you can take 10 trades, that's it. Just 10 trades, not 50 trades, not 100 trades, 10 trades. And bear with me, guys. You want to understand how to be a multi-millionaire. And I don't claim to be a millionaire, guys. I have never made $1 million in Forex yet. But every single year that I've been doing Forex, I have made more and more money. This year, I've already cleared over 6 figures trading. Last year, I cleared just under 6 figures trading. The year before that, I cleared about half 6 figures trading. And I progressively built up and built up. So everything is progressive, okay? So let's go ahead and show you guys this. 10 trades. Say you take 10 trades, okay? Out of those 10 trades, let's say 5 of those win. And let's say 5 of those lose. And again, guys, if you haven't seen this, stay with me. You want to understand how to be successful. This is going to blow your mind. You are going to be amazed when you see this. You have 5 wins, 10 trades. Now, let's say out of all of these 10 trades, you averaged a 1 to 2 risk reward, like I was just explaining to you guys with risk reward, meaning let's say you risk 2% of your account, which I know some of you guys are probably used to risking 30% of your account, or you guys probably have no idea what percentage you're risking because you may not practice risk management. Okay, so you risk 2% of your account to make 4%. Okay, at least 4%. Okay, so that AUD USD trade that I just showed you guys, that had a 1 to 3 risk reward. So we risk 2% to make 6.26%. So some trades you're going to have even better than a 1 to 2 risk reward. Okay, but let's just keep it simple, and let's say you had a 1 to 2 risk reward on each of your trades. So you risk 2% to make 4%. Well, if you win 5 trades and you win at least 4%, then that means you're going to profit at least 20% gain on your account. So if you have $1,000, you just made $200 on your account. And if you lose 5 losses, well, 2% loss on each of those. So you just lost 10% of your account. So you lost $100 if you have $1,000. So you have $1,000 account, you made $200, and then you lost $100. So you still have $100. So your account is still at positive 10%. Now, some of you guys might be saying, well, David, 10% is nothing. You know, there's all these Forex people. There's all these guys on social media that are saying they can give me 50% a week. They can give me 100% a week. They can flip my account in a month. Guys, anybody on here listening, if you can show me somebody that has more than 6 months of history with good risk management, that's the key, good risk management, low drawdown. If you guys can show me somebody, this is a challenge to any of you guys on here right now. If you guys can find me someone on social media right now that can consistently give you those crazy returns, 30%, 40%, 50% a month, and they're doing that every single month, and they've done that for at least 6 months in a row, and their drawdown on that account is around 15% or less, 10% or less, ideally the lower the better, and if you don't have, 60% drawdown, 70% drawdown, I will personally PayPal you $1,000 because this is recorded, guys. It's on YouTube. Hold me to my word. None of you, there's nobody out there that can give you those kinds of returns. So some of you guys that are new to Forex or have been in Forex for a while and you guys just see on social media all these scammers, claiming all these crazy returns, it's not possible. It's not possible. To be consistent long-term, you have to have a formula. You have to have a strategy. This is my strategy, guys, right here. So let's go back to this plus 10%. Again, some of you guys are saying, well, that's nothing. That's only 10%. Well, let's go ahead and let's just take that 10% really quickly. Let's bear with me. This is the juicy part, guys. Let's just take that 10% and let's just throw it into a calculator. So let's just say you averaged that 10% a month, okay, and you had $1,000 and you did that for the next 5 years. You would turn your $1,000 account into $304,481.64. And after 10 years, you would turn your account into $92,709,068. Even if you got 10% of the way there, even if you got to $9 million in 10 years with $1,000, is that worth it, guys? Is it worth understanding the way to do it properly, to take $1,000 and turn it into 9 million in 10 years? I think most of you guys are going to say yeah, right? Because who isn't going to say that? So I need you guys to understand that this is the way to approach. Okay, Luis, you said Michael J. Huddleston. I'm very familiar with him. The inner circle trader. He made 50% on a month, but he was a genius. Luis, if you can show me his track record of him doing that every single month, because you're going to have your good months, my man, no doubt. You're going to make 50% in a month, no doubt. That can happen. But can you do that every single month for the next 10 years? Probably not a realistic return, right? So remember, we're talking realistic, average, long term. So hopefully for at least one of you guys watching this right now, I hope this was eye-opening for you guys. Hopefully you'll stop following the hype of these Forex MLMs, these scammers, because guys, 99% of these guys are making money off of people joining their group. Obviously, I have a group, but if you guys don't know, I have a lifetime membership where 90% of my members are a part of my lifetime group. So I don't make money every single month off of my group. I maybe have 20 members, 15 to 20 members that pay me monthly. The rest of my 200 members that are a part of my group all paid me lifetime. I don't make any money residually off of them. So you guys have to understand that, okay? So, follow somebody that is doing what you guys want to do. You guys follow me on social media. I've been to 5 states in the past. I've been in 5 states and caught 7 flights in the past 30 days, okay? I lived in Las Vegas for an entire month just because I wanted to. Then I went to Texas. Then I went to Arizona. Now I'm in Southern California, and I'm about to fly to Australia on November 23rd to go out there for a couple months to enlighten people and show people in Australia Forex. So, guys, at the end of the day, it matters who you guys are following, okay? Don't let these scammers, these guys online that have no track record. Who has a track record at the end of the day? I have a track record. And I'm not even trying to sound arrogant, but literally I don't see anybody else on social media with a track record, okay? So it might be important that you guys follow and listen to somebody that actually has a track record and maybe be like, aha, somebody can go and post whatever you want. They can go change your mindset in a second by posting things on Facebook, posting things on social media, posting things on Instagram, but they are not, it's not realistic. Ask that person for a track record. If you see somebody online, I'm not even going to say any names because I don't like to be in drama, but if you follow somebody on Facebook right now that you always see posting profits, this and that, just ask them, say, hey, do you have a sort, and they're selling some sort of service. Ask them, do they have a track record? Just ask them, hey, do you have a tracker? Do you have a MyFX book? Do you have an FX Blue? Do you have something, a portfolio, something that tracks your history? They're all going to say no, because these guys are schemers, guys. They are out there to steal your money, and then you join the group and it's not what you expected. Every single person in my group might not be as fast as you want, and I might not take your $1,000 account to $10,000 in 1 month, but what I am teaching, guys, I am practicing what I preach. I am preaching long-term compounding growth. Again, it goes back to the compounding. You take $1,000, you grow at 10% a month for the next 10 years, and you'll have $92 million. And again, you do 10% of that, $9 million. $9 million. Who doesn't want $9 million after 10 years with just 1,000? Okay, so that's it, guys. That's really all I have for the evening. I really appreciate your guys' time and attention, taking the time out of your Sunday evening to watch this. I can just feel the vibes in this chat room, even though I can't see any of you guys. I can feel that you guys are amped up. I can feel that you guys are understanding this. I can feel it, guys. So, stick with it, okay? Don't let these people on social media change your perception. I know it's very easy. We're human beings. We are greedy by nature. PT asks, what's the 18% drawdown on my FX book? So back in, I think it was March or April, I actually had, we were at one point, I was risking 1% more. I was risking 3% per trade. So we had 6 trades that were entered and all of them hit our stop loss. So that created an 18% drawdown. However, since then, after talking to clients, after changing a couple of things, I'd never take more than 2 trades at a time, and I only risk no more than 2%. So usually 9 out of 10 times, you're only going to have 1 trade placed at a time. Gary says, absolutely keep the content coming. I'm here for the long run. Awesome, guys. Well, I appreciate every single one of you guys. If you have any questions at all, I do take the time out of my day every single day to try to reply to every single person that messages me. So, please feel free to reach out to me, Instagram, Facebook, Slack, Telegram, however you want to get a hold of me. Even send email through our website. I don't mind hopping on a call with each and every single one of you guys if you have any questions. But guys, you remember, you have to have that long-term mentality. You're either all in or you're all out. Okay. That's it. I appreciate all the love, guys. If you're watching this on the recording on YouTube, please leave a like, drop a comment. Other than that, I will, hold on, my social blade. Sorry, guys, I accidentally misclicked. Other than that, I will appreciate you guys. Hey, David, how much is the best package? Santiago, you can go to my website. It is positivetraders.us. I have a monthly membership and a lifetime membership. Also, last thing, actually just a quick update. I'm going to make this a more formal announcement across social media as well, but right now our lifetime membership is only $500. It's $499. I've been having the same price for almost a year and a half now. Our lifetime membership is going up to $997 on December 1st, okay? So I know what I give people. I know in the long run I'm going to be making people tens of thousands, hundreds of thousands of dollars. I plan on managing accounts for the next 5 to 10 years. I know what I give people, and it's time that I get some value out of what I'm doing. I put a lot of hard work in the past year and a half into Positive Traders to build this community, build this group. So if you guys want, if you're in the free group and you want to join, make sure you do that before December 1st, before the price hikes up. Santiago, he says, I want to be an affiliate for your program. Is there an affiliate program? I would be down to expand your program. Currently, I only have I don't have any sort of affiliate program or referral program. That will be coming over the next couple months, but I like to focus on the Forex. I like to focus on the results. I don't like to focus on the recruiting as much on the marketing side of things. So, but if you are in Positive Traders or you're wanting to join it down the road, there will be, some sort of like marketing, some sort of referral program down the road. We did have one for a little bit, but we actually just removed it as we modify things. But yes. that is going to be in the works, just not right this second, guys. So lots of good things to come over the next coming weeks. We're about to end 2017 very soon. I'm very excited. It honestly seems like just yesterday I was talking about how excited I was for 2017 on these webinars. You know, we were finishing 2016, moving into 2017. It is crazy how fast a year flies by, but I appreciate each and every one of you. Thank you guys so much for watching, and I will see you guys in next week's webinar if you're in the free group, and I will see you guys tomorrow around this time if you are in the premium group for our live trading webinar for Monday. Other than that, see you guys later. Have a great week. Peace out, guys.